How did this fintech startup go from being India's top digital payment app to literally being on the verge of a shutdown? For many in India, PayTM and this jingle has become a cultural catchphrase and synonymous for digital payments at large. But as of March 15th, PayTM's banking services are said to be suspended. The company has faced some tough scrutiny from the Reserve Bank of India. In this newsworthy explainer, we dig into what exactly from the vast PayTM universe will be impacted by RBI's orders and what it means for millions of PayTM's users. First, let's go into the heart of the crisis, PayTM's payments bank. PayTM was set up in 2010 by fintech entrepreneur Vijay Shekhar Sharma. Since then, over 50 crore people use this platform to pay bills, transfer or receive money, open businesses, and so on. In 2015, the company diversified into a payments bank, which became operational in 2017. A payments bank is like any other bank, but on a smaller scale and without credit risks, which means it can't advance loans or issue credit cards. Its purpose is to offer financial services to small businesses, low-income households, and migrant workforce. Since 2018, RBI says it's found several violations of its banking licensing conditions in its audit into the bank, including non-compliance with RBI's KYC or Know Your Customer guidelines, and violations of its anti-money laundering compliances. While the company gets busy with damage control, the biggest blow is on its core business model, which makes the bank inseparable from the rest of the PayTM universe. What does that mean? So the app is the only gateway for customers to access their PayTM payments bank account, its services, funds, etc. It's also the only way to register or log into the bank in the first place. For PayTM, this technological entanglement makes their banking business easier. For RBI, it puts the bank's customers, their data, and their money at risk. The RBI had issued warnings to PayTM several times since 2017 and imposed fines of over ₹6 crores in the last 3 years for violations. But last month, it finally ordered the company to halt its banking businesses. PayTM denies allegations of money laundering and says it's setting the record straight with the RBI regarding the other irregularities. RBI has given a deadline of March 15th for customers to jump ship or switch their payments to other banks on the app. For PayTM, the real test is to retain its customers' confidence. Last week, the company shifted its nodal account to Axis Bank to continue its digital payments on its systems. In the meantime, there is a list of do's and don'ts by the RBI before the deadline ends. Here's a quick breakdown. Even after the deadline ends on March 15th, if you have funds in your PayTM payments bank account, you can continue to use your wallet services, use the fast tags, NCMC features, withdraw money, use your PayTM QR code soundboxes or POS terminals, and avail auto payments for bills, EMIs, and subscriptions. However, you will not be able to add more funds to your accounts, use your debit card, deposit or make transfers, and get your salary or subsidies and direct benefit transfers credited. The RBI advises that all customers should ideally just migrate to other banks before the deadline. So technically, PayTM is still alive, although this will be a death knell for its payment bank's 300 million wallets and 30 million bank accounts. This is all for now, but we will keep you abreast of all information related to PayTM on the grid. Keep watching this space.